Good afternoon and welcome to GrainTV for February 24th, 2012. To my right is Cody Bills and I'm Brock Shimbino. We saw a week of choppy trade leading up to the USDA reports that came out this morning. For the week we saw corn down 1 cent, beans up 11.5, Chicago wheat down 3, and Kansas City wheat off 8.5 cents this week. And as we promised yesterday to our viewers, we're going to give you a full rundown of what the export sales had in store for us today, and today we're going to deliver on that promise. Cody, why don't you take us through the numbers?
Yeah, the weekly exports were great for beans, so that I think is the theme of this week's export report. Corn came in slightly shy of expectations at 840,000 metric tons. Beans at 4 million metric tons versus an expected 3.9. Now, 1.1 million was actually booked for this marketing year. That really helps us move us along to meet those USDA expectations that they had in the last WASDE report. As for wheat, we came in beating expectations slightly, but not by much. Sales progress for corn. Take a look at where we are in terms of the overall marketing season. We're ahead of pace 18 million bushels, but we did slide 4 million bushels this week. It's not a game changer. Don't worry about it. Next week, according to our forecast here, taking into account seasonality, we're not going to have huge sales. If we do come in, we could easily get those bushels right back up and continue this pace of beating USDA expectations. If you take a look at beans, though, this is where I think this sales report really helped out. If you look at beans, we're behind 38 million bushels, but we improved our position 18 million bushels from last week as a result of that bar right there. It is a marketing year high. We may not see these same kind of sales in the weeks to come, but we do anticipate that the second half of the marketing year we're going to see a pickup in sales, and I think it's going to get us right back on track with the USDA estimates that they had in the last WASDE report. Just to switch gears here, the USDA had their annual Ag Outlook Forum. They reported some numbers that were highly anticipated by the market. Brock, did we see any kind of new numbers, anything that surprised the market to move the market one way or another?
We didn't really see a whole lot of change in the numbers from the USDA. The biggest change that we did see was that beans got bumped up on their planted acreage by 1 million planted acres to 75 million from 74 in their previous estimates. Corn is sitting right at 94 million acres, and wheat is actually up above last year at 58 million acres. And take a look at those yields right there. That's something that the market's really going to be paying attention to as we move forward, especially on corn. We've had 2 years of below trend line yields, and our trend line for this year is projected to be at 164 bushels per acre.
Yeah, 164 seems a bit high. I think, do you think the market is pricing in 164 yield, or do you think that this seems a little bit lofty? Maybe the market's going to just discount what the Ag Outlook Forum says?
Shortly after these numbers came out, we saw a lot of information come across the news wires that was refuting the fact that we're going to meet 164 on our yield. Most traders that I saw on the news wires were sitting around the 156 to 158 trend line, or excuse me, not trend line, but the yield that they're expecting for this upcoming season. So.
Yeah, we've definitely had weather problems in the past 2 growing seasons. I think that there's some weather problems that could shape up here in this growing season. I'd say, if it was up to me, I'd say 164 is a bit high. I certainly wouldn't peg it there, but that's what the USDA says, so we'll take it with a grain of salt. If you have any questions about what we talked about today, give us a call, 877-472-4607. You can email us or follow us on Twitter at GrainTV. We appreciate you tuning in, and we'll see you on Tuesday. Have a good weekend.